Started as an East Coast vibe, now I'm going worldwide. We got this bitch going crazy. I used to take the Mazda for a drive, now I'm on the 405 like it's fuck you, pain. Really sick of standing outside, had to push them all aside, is what you get for trying to play. I bet they make a movie when I die just to talk about my life. They need an actor to portray me. I got this motherfucker clear like an hydra. I got elevator flow, I'm on a high top. I got little something stacked like an IHOP. This is '05, you will put it on your iPod. I'ma give you something that you can't forget. Put the price up, baby, add the tax a bit. No, you saw the comma, thought it was an accident. Well, it wasn't. It's about time the kids buzzing. I'm trying to get a peek in the elevator. But if we talking peaks, I need mine like the Himalayas. Talking yay high, man, I never had a vertical limit. I ain't seen you put in work in a minute. I gotta put on for the family. That goes for every person that's in it. Used to scrape by, working as the service attendant till I got more. Bitch, I ain't comfy, I need the top floor. Doing anything to get that spot for. Started as an East Coast vibe, now I'm going worldwide. We got this bitch going crazy. I used to take the Mazda for a drive, now I'm on the 405 like it's fuck you, pay. We really sick of standing outside, had to push them all aside, is what you get for trying to play. I bet they make a movie when I die just to talk about my life and need an actor.
What is up, everybody? You know, I always start this show off by showing love to those companies that help make this podcast possible. First and foremost is going to be King Dingaling when it comes to tool bags, the Cadillac, the Rolls Royce, the Bugatti, VETO Pro Pack. Guys, they are having their 2-tier promotion that started March 1st and it goes until May 31st. So if you're looking to pick up a new bag before, summer, trying to rock this summer with something new, now is the time. Go get that bag, and you're going to get one of these free bags with that order as long as you buy it from a reputable dealer. I always tell people either go to VETO directly. Your local supply house is fine too. Just make sure you register it. Or you can go to True Tech Tools using the discount code Uncensored and save 8% on your order. But there's going to be 2 different ones. The tier 1, buy any tier 1 product and get a free SPMC. Obviously, let me read the screen. Tools are not included. Hopefully, if you need me to read that, then you're a moron. I'm just going to tell you. But yes, tier 1. And when you read the description of what you're trying to get, it's going to tell you if it qualifies. So just make sure you pay attention. And then next, it's going to be if you get something that's in the tier 2, you're going to get a free SC45. So both nice little compact bags that it's free. So if you're going to get something, why not get something a little bit extra? Just make sure you do it before May 31st, and that will be sent to you. All right. So if you're going to get a bag, go check out my friends over at VETO. And apparently it says this for all of our UK and people in Europe who listen to this podcast. The spring promo does not begin in Europe and the UK until March 24th. Okay, so they're good. It just didn't start till late, but it's still active there. So it is active for all of our UK and Europe brethren and sisters over there. All right. So go check them out. Next is going to be my friends over at Yellow Jacket. If anybody saw the video that I posted on Instagram today, I showed you I was using one of their wireless kits. This was the exact kit that I was using. Absolutely love it. I was also using it in conjunction with this, the wireless amp clamp. So between this and the other one, I had this thing hooked up and I was able to get my electrical readings, and then I'd have to add a few with my meter, but my temperatures, my pressures, all that kind of stuff. And the YJ View app is actually pretty awesome as far as how everything's together. It's very easy. So I would check it out, man. Like I tell you, I will never, ever tell you guys what to buy. I only recommend, and I love the stuff that Yellow Jacket has it going on. They've updated a bunch of things. They updated their app, and I think that they are on the right track. I truly love using it. So once again, for summer, if you're going to get a bag, go check out VETO's spring promo. If you're looking to upgrade your digital manifold, wireless gauges, whatever it is, give my friends at Yellow Jacket a look. And once again, you can find all these items over at True Tech Tools, another show sponsor. Use the discount code Uncensored to save 8% on your order. With that being said, let's get on with the pledge and get on with the show. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation under God, indivisible, with liberty and justice for all. God bless the United States, and thank you to all those men and women who defend it.
Welcome to the #1 rated HVAC podcast. If you're looking to grow in the HVAC industry, then you're in the right spot. Blue collar people talking about blue collar shit. Let's get better together. So turn up the volume, buckle your seatbelt, and let's welcome your host, Gil Cavey Jr.
What is up, everybody? Welcome back to the HVAC Uncensored Podcast. I'm your host, Gil Cavey Jr., and here we are, another hump day, another Wednesday, back to the normal scheduling program on Wednesday nights. Well, I guess, thank you for being here. But I am really seriously thinking, please let me know. I didn't go back on the last video, so if you answered, thank you, but I didn't see it. What do you guys think about Friday nights? So I'm just gonna let you know my thought. My thought is starting to go on Friday nights, which is kind of working with my schedule now, but not set in stone. Um, Doing the podcast at 8, and then as soon as the live podcast is done, going straight into a hangout. So let me know what you guys think. If that's something you guys would be open to, I might try to make that happen and reschedule some podcasts and change how people can book. So just let me know what you guys think, man. But I have an awesome show tonight, man. It's it's a little different. Somebody that I met and was introduced to uh, has a new podcast, the Profit and Grow podcast, which is very cool, talking about different trades and business owners and what they're doing in their business. And he's just got a really, really cool story. I can't wait for you guys to meet him. I think this is going to be awesome. And also be able to provide some amazing information for a lot of you that email me all the time wanting to start your own business. So, guys, if you can please help me welcome and put your hands together for the owner and host of the podcast, Profit and Grow, Mr. Tyler Martin.
Hey, thanks, Gil, man. So happy to be here. So happy to have a chance to meet you in person now. This is going to be a fun conversation.
Yeah, man. Of course. Thank you so much for being here, man. I really, really appreciate it. I know it's taking the time to do these things, man. It can be a lot, especially when you work all day. And then I know I do mine at goofy times. Some people do them during the day. I've just always liked doing this live and not like that pre-recorded stuff. That's just me. But yeah, man, I guess uh I didn't shout at anybody, so I'll do it at the end. Sorry, guys. But I guess let everybody know a little about you, man. A little bit about who Tyler is and your background and what you're doing, my man.
Yeah, so just give you my short story. I started out my career as a CPA, that's a certified public accountant. Started my own firm, and I built it up to about 200 business clients over about 5 years. And in those business clients, quite a few were blue collar companies. And so I really appreciated working with them. It was my favorite type of client to work with. And from there, one of my clients was starting an engineering services firm. And I ended up selling my practice, and I went and joined him, and I ended up running that company for about 8 out of 10 years that I was there. I built it up to $25 million a year in revenue, and we ended up selling it to a very large company back east for quite a nice price on it. We got there's the way they value a company is based on the profit, and then they put a multiple on it, and so we got a really nice multiple and a nice cash out. And so after I did that, I was like, okay, well, what do I want to do with the rest of my career? And that's what's led me into this fractional CFO / business advisory services. And the majority of my clients are in the blue collar trades, mostly home services. I've got probably about 20 clients in various types of trades, HVAC, home services, Very a wide variety. My concentration, the main concentration, is in HVAC, though. So that's kind of my story. Just love working with my typical client. Probably is going to have somewhere between 5 to 40 technicians. So they're going to kind of be an established business. But I've kind of over my career, I've gone from people that are just starting out to people thinking about starting a business. I've gone all through that chain. So I'm really excited. Maybe if there's some people out in the audience going, man, I wonder what it would take for me to go out on my own, or what should I be thinking about? I think that would be a fun conversation if you think it's appropriate for your audience.
Yeah, no, for sure. I guess before we get into that,
Sure.
I guess explain a little bit because maybe some of them don't understand the role that you actually provide for these businesses. And you don't got to go in great depth, but just explain exactly the role or the void that you fill for these companies.
Yeah, that's a great question. So, most businesses have a bookkeeper or an accounting team. And what that team or individual does is they're recording historical items. So, they're putting, checks that have been written, invoices that have been paid. They're putting that in the accounting system. So, that really kind of covers your historical data. Then you oftentimes have a CPA, and your CPA is the one doing tax returns. They're looking at how much tax you owe and strategy. But a lot of times, as a business is growing, what they don't have is they don't have someone helping them look forward from a.
Taxes.
That's a high level of organization, Gil.
Yeah, well, it's afterwards, but yeah, I had a bunch of stuff over here looking for everything. So sorry, I didn't mean to interrupt you, but you said that, and I
No,
looked over and I got haunted again.
it's the second time you've already got me to laugh though, because I was chuckling when you said the tools weren't included in the tool thing. I'm like, oh man, I better double check with you, make sure the tools aren't included.
Yeah, it's so funny they put that on the screen, but I get somebody must think that it comes with it. So
I guess. So anyway, so you've got just to recap, you got your bookkeeper that's kind of doing historical stuff. You have your CPA that's doing tax returns, maybe some tax planning, hopefully. And then but you don't really have someone as your business starts to scale that's really helping you look ahead. And when I say look ahead, what are things that you should be looking at? Well, how much cash am I going to have to pay the bills for the next 6 months? If I've got seasonality in my business, am I thinking about that looking ahead when things slow down? Am I kind of, especially once you start to add a small leadership team, am I thinking about a budget, like how much each individual can spend? What's some of my variables in terms of how much revenue I'm making off a technician, for example? Although I'm sure a lot of technicians out there don't like to hear that, there are numbers that you, as a business owner, you kind of want to keep track of in
yeah,
terms of your return on technicians. Is a very key number that a lot of times, the other two, the CPA and the bookkeeper, really don't look at that kind of stuff. And that's what lets you know if you're operating at a high level and planning for things and strategizing from a financial standpoint and bringing together that financial strategy with the business strategy. So you meet ownership's goals, both from a business standpoint and a financial standpoint.
yeah, no, I love that. That makes so much sense. And most technicians probably don't like hearing that, but they have to realize that. I mean, it, you're not running a charity. Everybody goes like you may love what you do, but if you didn't get a paycheck at the end of the week, you're not going. So you know what I mean. It kind of goes around, and I learned that as I rose up from being a technician to now running, owning, and being on the other side of it is. If you want to be that owner that can provide all these amazing things to your technicians, um, nice vans, uniforms, training, all that kind of stuff. Well, guess what? We have to make the money to pay for that stuff and pay you
Yeah.
a good wage. And it takes planning and somebody like your expertise or someone in the company out of the house, whatever it is, to be able to do that. Um, and plan for it. You can't just you don't throw shit at the wall and just see what sticks. That doesn't work, and that's how doors end up closing.
Right. And Gil, one thing I realized early in my career when I used to work for CPA firms, my billable time, I quickly realized the more billable time I could build, the more valuable I was to the firm, the more money I could make. And it's the same formula here is that, the more valuable you are in terms of getting jobs, high quality jobs that you don't have to go back out and fix and get a good billing on them. The more value you are to the company and the more upside you probably have in the company.
Yeah, no, yeah, for sure. And I mean, that's like your my best tech, you know what I mean? The one who's bringing in this crazy revenue, if he asked me for something crazy, I might be more inclined to give it to him versus the
Right.
person who doesn't produce that kind of revenue. Doesn't mean I don't like them personally, but it's like this person makes me this amount of money while the other person makes me this. I can afford to do this. The means justify what he's asking for.
Right, right. It becomes very reciprocal. They do
Yes.
for you, I do for you, and like you said, if it's something crazy, you might have to think about it, but when it's not crazy, it's a lot easier to say yes.
Yeah, yeah, of course. So now to divert into what we were
Yeah.
talking about before, I get hundreds of emails of guys saying, "Hey, Gil, I'm looking to start my own company." And I try to be honest with them. I don't want to scare them, but I'm like, "Hey, just prepare yourself going into this because more businesses, like, what is it, 1 out of 10, 3 out of 10 end up making it. The rest of them close their doors. And most of these people, they're very good technically. They know dog shit about business, but that's okay. You have to learn and prepare yourself. So for you, on your side of it, like, what is some advice to give them? Like, what's some things that they can, like, properly prepare themselves?
Sure. And Gil, one thing I just want to throw out there. I love helping people. This would not be my typical client profile, but if there was someone out there really getting serious about wanting to start, I more than happy to have you go to my website, book an intro meeting, and I will probably put you to sleep sharing information in terms of things that you should think about. So that's an open-ended offer to anyone. There's no charge for that. I'd be happy to help someone just maybe get them started in the right direction. So that aside, what are some things that we should think about? Like the biggest thing, and your data is correct. 10-year companies, I think it's 90%, 87%, depending on the number you hear. 90% of companies fail after 10 years. I think it's something like 75% after 5 years. So there's a high failure rate. And 9 out of 10 times, it's usually the same thing. It's cash flow. Most people that start a business are not adequately capitalized. They don't have enough money set aside for a rainy day. And the minute seasonality kicks in, you don't get paid for a large job or something goes wrong, the wheels fall off. And so that's a big one. And I will extend that capitalization. One other thing to think about cash flow is what a lot of people do when they think about starting a business. I had a real story. I had a client come to me and he was starting a business. It was in the trades and he had bought a business and he used his 401k money to actually buy the business. Well, the problem is he went through every single dollar to buy the business. And as soon as the business didn't start out like he thought it would after he bought it, he ran out of money and he folded and he ended up losing all his 401k money and his business went out. So I would say the number one thing is cash flow. Number two is understanding, and this is where most people also kind of don't do well, is technicians are obviously really good at the technical part of their job. Where sometimes they aren't great is going out and getting business. They want it to come to them. And you really have to, if you're going to be in business for yourself, you really, really have to understand you're also a salesperson. And if at any point you say to yourself, I don't want to do that, then really, honestly, you shouldn't go into business for yourself. So I'll stop there and then feel free to steer me, or if you want me to drill down more.
Yeah, no, and I'm glad that you said that because that's the truth. And I always say technical and communication, but let's be honest, it's sales.
Yeah,
That's what it is. You got to be able to have. Yeah, you may do side work working for somebody else, and you're like, oh man, this money's great, but now this is your living. You don't have that anymore. And normally, when you go from working for a company to starting your own business, you're not going to make more than what you made before. Normally, you're going to make less in the
right.
beginning.
It's a
You got
great
to eat,
point.
eat eat those shit sandwiches until you build back up. And the other thing is I get it. In the beginning, you're just trying to stay busy and work, and maybe you're a little bit cheaper. You don't have a lot of overhead. You're working out of your house. But as you start to grow, you have to charge the right prices. I see so many people, Gil, I don't understand. I'm busy every day. I'm doing all these calls. At the end of the month, the end of the year, I look in the bank, I don't have any money. And I'm like, you're not charging enough. That's
Right.
it, that's that simple. That's your problem. You're not charging enough money for the service you're providing because you're not taking in. It's not just, oh, I got to change this capacitor that cost me $10. I'm going to go charge Mrs. Smith $150. Okay, well, what about your gas, your insurance, and all these things got to be factored in now, man. Like that's why you got to think about it and you need somebody to help you. Um, because most people, I always say, good intentions, pave the road to hell. So people mean the best, but sometimes that's where it leads. And people their pride gets to them. So ask questions, listen. So everybody who sends me these emails, please take this knowledge in and listen to it, please.
And Gil, I love what you just said. I want to kind of dive into that one a little bit in terms of pricing, because this is another thing. New business, honestly, old business owners get this wrong too. So it's just everybody kind of misses the mark that tend to have cash flow problems and profitability problems is pricing. And the way to do pricing is to really understand. First, you got to go, okay, what do I want my margin to be? I want my gross profit margin to be, I want it to be 50%, let's say. So that means if you charge a client $1, your direct costs to get the job done, parts, if you have to hire people to do the job, all those type insurance, direct insurance, stuff like that. The remaining amount is 50 cents on the dollar that you get to keep before any overhead like rent and stuff like that. Your truck costs also are included in that, gas, stuff like that. So once you figure that out, then you figure out your costs, and then you add the 50% on what you should charge. So you get exactly your 50% margin. So you actually have a lot of my clients, I'll do a calculator for them. And I really advocate this, and they literally will be doing a calculator to figure out what they should be charging, especially when they first start out, so they know that they're billing the right thing to the client. If you don't do that, a lot of times what we do is we just match the guy down the street, or we say, oh, we only can charge what our competitors are charging. Well, the problem is if your competitors is undercharging, they're just guessing too. Then guess what? You're guessing too, and you're all undercharging, and it's just a race to the bottom. So you want to be more strategic about your pricing, and that is a huge topic, I would say, not just for established business owners, but I'd love to just plant it in people's minds if they do consider going out for themselves sometime.
Yeah, no, for sure. And you don't know what your competitors' businesses are. Maybe they
Right.
have a bunch of cash flow. They're not
Right.
leveraged, and they can do that for whatever reason. So you can't just make that decision looking outside of it. And somebody brought up in the chat that I want to bring up too is in the beginning, yes, but yes, maintenance contracts do help a business scale and grow. But in the beginning, yes, try to provide maintenance. Any revenue is good. But when you're first starting, maintenance contracts are probably the least of your worries, to be honest.
Yeah. Yep.
That's something when you're going to be a little bit more established to carry you through the shoulder season. So, yes, they do help a business grow, especially selling a HVAC business. That's your true customers. That's going to add value because you can have 10,000 people in your customer base, but if you only have 1,000 contract customers or membership customers, those are the people that are going to call you 100% when something breaks. That's a lot of times where the value is based off of that and your total revenue, profit, stuff like that. So yes, that's important, but I would have to say not in the beginning.
I totally agree. I would also say, and sometimes this actually gets skipped. I imagine for some people it'll be kind of basic, but make sure you're charging for those initial service calls for going out for them. A lot of times those get skipped. People will go out, they won't charge for it, and charge for it and then credit it back against the repair. Your repairs are what you're going to get your best margins on generally. So that's really good business. It's healthy business. Now, the service agreements are great. Probably getting ahead of yourself though in terms of when you first start out. Definitely something you want to build to in the future. But I'd say get those service repair those initial charges, credit them back if they hire you for the job, and then you're going to get your best margin probably on services over, say, for example, installs.
Oh, yeah, yeah. So installs are the big ticket items
Yeah, yeah,
and they take a whole day. So I get it. In the beginning, if you can get an install, hey, great, take it.
sure.
Just make sure you're charging right. But if you can do one install or run 5 service jobs, I mean, whatever, as long as you're producing revenue at the right price, you're moving in the right direction, as far, but people try to do too much too fast.
Yeah.
I need to buy a van. I need to hire a guy. Like, whoa, man. Like, don't worry about hiring anybody. You've been a business owner of a business that hasn't made a dollar for 2 days. Don't worry about hiring people. You know what I mean? Like, just slow down and proceed. Like, one of our good friends who was on here, what was he? He was last week. He was last week. He's got a business and does great, and he's a one-man band. He's had employees and went
Wow.
backwards because he said it's just I make good money. It's less headache, I get to do what I have to do. I'm home when I want to be home. It's like when you start a business, like it's all about what you want. If you want that
Mhm.
business to be hey, I want this thing to grow. I want to be a $10 million. I want to be a big player. Awesome. Set your goals and set a roadmap to be able to get to that. If you want to be a one-man band or a small shop, that's fine. There's no right or wrong answer. It's your business.
Yeah, that's a great point. In fact, in this week's episode, my show actually is profitandgrit.com. Grit
Oh,
meaning like gritty. No, don't worry about it, man. No big deal. But one thing that I love this guy said, because it's so true, his name's Dallin Huso, and he talks about having a why. And in what when he started his business, he's in the pool service business. Now he's kind of scaled it. He's got managers and he's built it to a pretty decent size. But his whole point was, if there were times he used this exact language, he says being in business for yourself sucks sometimes. And he said, but the reason I keep going is because my why is to be able to be remote, be able to do whatever I want, work my own hours. And that's his why. That's what keeps him going. So having a staff and having a team is what keeps him going. And if he didn't have that why clarified, there would have been times, by his own admission, he would have quit because it would just be too much. And so, to your point, like if you want to be a solopreneur, that's a great model. There are shortcomings of that. There's pros and there's cons of that, just as there's pros and cons of having scaling business with employees. When employees quit, they're a major headache if suddenly you have a ton of jobs and you don't have enough technicians. So there's pros and cons of both. It's just kind of defining what's important to you.
Yeah, no, for sure. Um, what Freant said, he said, I could disagree. You could sell the maintenance on your first visit and you're laying down the work for him. No, Leon, you're not wrong by any means. What we're trying to say is like these guys that are going to start a business and there's so many things that it's overwhelming. Like, could you sell maintenance agreements or contracts? 100%. But there's probably some other things on your mind that you should probably deal with before that, but you wouldn't be wrong to sell them. Any clientele that you can get to commit to you or, you know, um, consistent business is a good thing. A lot of times
100%.
it's hard to sell them when you're small because you don't have that unless people know you. So hopefully it's because you're a little bit cheaper than the other guys. But yeah, I'm not saying you shouldn't do them by any means. You're definitely not wrong, brother. So we
It,
don't have
it
to
just had
disagree.
Sorry, Gil. It just also has a little bit more bells and whistles to selling the service agreement. And I would say if you're doing that right starting out and you're trying to establish infrastructure, you're trying to establish clientele, you're trying to get jobs just to get money in the door, just wouldn't be where I'd focus my initial attention. But hey, if you did have an opportunity for that, yeah, I'd say do it out the gate. But just I wouldn't. I'd say it could take you off path if you focused on that too much initially.
Yeah. So I've seen one guy that it's the only time I've ever seen it work, but he built his business on maintenance. And
Mm,
he literally said, "Hey, I want to be the guy that maintains your system so you never have to call me for breakdowns." And people ate it up and he built
wow.
it and kept going. And obviously, when it broke down, who'd they call? They called him. So I was like, "Hey, man." And when he first said it, I was like, "I don't know if that's gonna work." Well, he gave me the big obviously he didn't, but I mean, it worked. So to your
Yeah.
point when it comes to maintenance, but for him, he planned it. That was what he designed it around, doing that. I know another guy that only works he's the ductless specialist. He doesn't touch normal split systems, nothing else. He only does ductless. He created himself a market that he lives in, but that was by design. It wasn't by accident. So he was able to cut a bunch of the other stuff out and worry about his piece of the pie. So if you're going to do something like that, great. But in the beginning, when you have all of it, that's when it's like importance. You got to start, your little Venn diagram and start,
Yeah, totally agree with you. I would say the guy that started out as the maintenance, he must be a pretty good salesperson too, or have some type of network or something, which truthfully isn't your typical out the gate new business owner. They're not usually that polished, has been my experience. Would you agree with that?
yes. Yeah.
Yeah.
Normally it's not because a lot of times the people that will go to start their own business are the guys that are really technical and not
Yeah.
always great speakers.
Right.
They don't like the sales side. Like or they start a business because they for there's misconception. They think the owner of their company is in their office, like blowing their nose and wiping their butt with $100
Right.
bills when that's really not how it works. And the other thing is they're like, oh, well, if I'm going to do this work, I'm going to do it for myself. I'm not going to make somebody else rich, which whatever, for whatever your reason is, just sometimes those are false misconceptions.
Yeah.
But yeah, he was great. There's some of them that can talk, but and I know some people that they're good communicators, they're okay technicians, but then they partner with somebody, which I know partnerships don't always work. So I know that's a whole nother podcast, but they find somebody else that does what they're not good at. So if it's somebody you trust, then that's good. But I've also seen some partnerships, they go south and now you got half your business gone. So I normally don't recommend that to people when they're first starting out, as I work with two partners, but these guys are amazing. So I'm super blessed to be with
Yeah.
them.
Yeah, partnerships, like you said, they're another podcast. I would say if you can avoid partnerships, I think there's something to be said for that. It's no different than a marriage. I mean, marriages fail, and unfortunately, so do partnerships. And I shouldn't say the only difference. The problem with a partnership and a business fails is it's someone's livelihood, and probably could also be the dissolution of the business, the dissolving of it, if the partnership falls apart. So there's just a lot of things you have to consider. And honestly, like even like divorce, a lot of times is what impacts a partnership, because a lot of times if one of the partners is going through divorce, they start to, life gets in the way of their business and them being able to stay focused. And that's a lot of times the trigger of how things kind of go sour.
Yeah, no, and I think it's great when, so what I love about, I'll call them out, Brian and Roy, who are, the owners of where I am. They're the owners. They worked before and built
Mhm.
like giant businesses, you know what I mean,
Yeah.
in a different field. So they've been working together. They have that repertoire and then chose to do this. So that's why it's, and just they don't have, I guess I'm trying to say they don't have that, and I don't want to say this and seem like I'm saying talking bad about them because it's not as a good thing. They don't have that dominant like alpha personality. You know what I
Yeah.
mean? When you
Yeah.
have a
Yeah. Totally.
partner that's like, oh yeah, So
Yeah.
if you have the alpha and you don't are dominant and the other person is not submissive, then you start to have, kind of headaches. Where I think the three of us together, like everybody has their role.
Yeah.
Like, you know what I mean? Where we don't
You
have to do
complement
that.
each other. Yeah.
Exactly, and that's
Yeah.
what gets me so excited about it is, it's not like, yeah, we don't have that situation.
Got it. Got it. Yeah, that's great. That sounds like a good one. The fact that they have established history, I think, is huge too. Um, I had a good real story. Guy was starting his business, started taking off. He comes to me one day and he says, "Hey, I want to bring my brother on as a partner. What do you think?" And I say, "Man, I mean, what's the values of your brother? What's his work ethic like?" And we just start going down the list. And he's like, "Come to find out, his brother, like every 6 months, is looking for a new job and isn't the most motivated guy." And so after we got at the end of the conversation, he's like, "Yeah, I think I'll hold off on this." It was kind of a smart move because the business ended up going into like a $10 million a year business. And his brother, half the time was at home watching video games. And it would have just been a real nightmare, I think, if they partnered. So even sometimes family like might not be the right mix.
No, I mean, I love my family. I don't want to work with them. It's I got a bunch of very talented family members, and we're all very strong-minded. Like we
Yeah.
wouldn't, we have fun together. I don't know if we would fit together like that. And the ones that I see do that, amen. I wish that live in the same neighborhood and stuff like that. I love my older brother. I love my older sister, but we'd probably kill each other if we were neighbors and then worked at the same company. you
Right.
know?
Yeah.
So it's the different dynamic, but more power to them. Do you see a lot of that? Have you like what is your situation working with companies like in the family space versus not?
Family businesses are tough. One that comes to mind, uh, $14 million a year plumbing company, without naming names, I don't wanna say geography or anything like that, but father and son, both father is 51% owner, son 49% owner, just so much friction and baggage from childhood stuff, nothing to even really do with the business, but they need me beyond just my financial skills to be the mediator between them, to be able to discuss things with each other, because the father feels the son's not very astute business wise, and the son feels like the father's very archaic in his way of building businesses, and so it's just constant friction. And I literally, yeah, family businesses are usually a big part of my business, and I will tell you, 9 out of 10, there's significant friction of some sort.
Yeah, it's funny as we said that my one of my really good friends Zeke, who is a business owner, he said, "Do not work with family." He's got it, and been in the family for a long time, and I know he's went through hell and did all kind of stuff. So I saw him say that, and I just kind of chuckled now, but I know that he's been through hell to get to where he is now. So
It's tough. I mean, you just there's just so many variables to it. The other one is like husband and wife working together. That's another one that kind of can be, sometimes it works. Most of the time I see there's a lot of friction with that. I know for me personally, man, the thought of working with, seeing my wife at home and then working with her all day, that would be pretty challenging for me. I kind of would want my own safe space. I don't want to say safe space, but space where I'm just doing my work. But I do know it works sometimes. More often than not, I think it's a little bit frictional, is what I've seen. So family's tough. I mean, that's a whole nother podcast too. I would say
yeah.
just the whole family business and the dynamics and how do you manage them and how do you, yeah, just how do you manage the dynamics of a family business?
Yeah, because you don't just lose a sibling or a parent, I mean, or a job. You're losing a sibling or a parent in sometimes those relationships. But it's funny, I just made me think. I was at a customer's house yesterday, and we actually did his business and his house. And he had got frustrated for a little bit. And when I got to talk to him, he was like, "Yeah, I'm sorry, man." He's like, "I'm technically not supposed to be working this week because it's, spring break, so my wife's pissed off, and she's the CFO of his company." He's like, and she always bitches and says, "I gotta pay the bills and do all this hard stuff, and you get to just talk to your friends all day because that's he's talking and selling and doing stuff like that." And he's like, "Yeah, sorry." I'm like, "Man, that sucks." I mean, he was joking, but he did say it can be tough at times. So it made me think of that part of it. But I guess so. This is kind of odd. Well, I'm trying to think of a way to tie this in. Something that what is one of the I guess there would be a couple of problems or some of the biggest issues the companies you deal with, you find that they're the biggest issues that you got to keep going back to regardless of the size of the company or the hardest things to get fixed or on the right track. It's kind of vague.
I
I don't
mean,
know if that makes
yeah, no, I mean, I would say there are definitely reoccurring themes. I don't know if it would necessarily apply to people just starting out. I think the reoccurring themes I see is technician issues. Frankly, staffing is always a big one. And turnover, there's a huge cost in turnover. And so I would say those are very reoccurring themes. I think sometimes when you do look at kind of metrics related to efficiency within your staff, that's kind of a reoccurring one where the return isn't what you'd want it to be in terms of the ideal metrics of the company. So that's a recurring one. I think seasonal cash flow is a big one, depending on your region and where you're located. I think kind of planning for that and being prepared. um, Along the same lines of technicians, I would say training, building some type of training plan or having some type of way of bringing on new people and getting them up to speed is a huge one that always comes up as far as budgeting, planning, things like that for it. Um, the other big one is vehicles. I mean, hey, I want to expand. I've got enough work. Do I go out and get another truck, get a wrap, and just get it out on the street, hire another technician? I think there's planning that goes into that because once again, you're back to seasonality. If you expand and you buy a whole bunch of trucks or a few trucks, and then all of a sudden you're seasonality and you have no business, now you're funding those monthly payments. You've had the cash outlay to wrap the truck and equipment and stuff. It just you have to think about these things. These are the kind of the reoccurring themes I think I hear the most of. I'm trying to think if I'm leaving anything out. Obviously supplier or vendor relationships, supplier relationships, trying to build relationships where you can get discounts, maybe during seasonality, have a little bit more liberal payment terms to buy you more time in terms of paying for the materials that you buy and the supplies and equipment. That's another thing that I would say comes up frequently. Those are the big stuff that's at least coming to mind, Gil.
No, I love those, and I'd love to touch on. each individual one too, because I would love, like one when it comes to suppliers and payments that some of them don't let you, but I've been able to negotiate when I've been spending a little bit more money is being able to pay off that bill with a credit card, a business credit card, because then I get points for the money I was already going to spend that I can use. Like my money's making me money. Where a lot of these people are like, it's got to be a ACH or whatever it is kind of payment. You can't use a credit card. So, I try to negotiate that ahead of time beforehand because if your money can work for you, I want it to work for me as much as it possibly can. Um, the other one, I'm curious about your opinion on vans because I've been a part of both sides and I see both sides. Some people think of like the rental method to like rent from these big places, but then people say, oh, well, you don't technically own it. You don't get like the depreciation and some of the write offs. Whereas if you own it and you buy new vans, maybe you can't get as many. Is there a right or wrong way, or which does the situation depend on it, or how would you advise somebody asking you that question?
Yeah, great question. Before I answer that, I'd love to just touch on the supplier payment terms and things like that. I do have many clients that pay via credit card, and you're 100% correct. If you don't ask, you're not going to get things. So
Yeah.
negotiation, half of it is just asking, right? Like, hey, this is how I want to do it. And if you have, 3 to 5 that makes sense for your business, and you can do this. You have 3 to 5 really great sources that you have great relationships with. Oftentimes, those are the ones that will kind of make more accommodate you more, and that's exactly what they do. They get an invoice, they wait till the invoice is due. It might be 15 days or 30 days depending on the vendor, and then they charge it on their credit card, and then their credit card gives them another 20 or 30 days. So it's a great way. There is a catch 22 here. You have to manage your business responsibly to do this, because if you don't, you're going to build just a lot of debt and you're going to get behind. And if you're robbing Peter to pay Paul, what I'm telling you is actually going to hurt you rather than help you. But if you're running your business very prudently and you're managing cash flow, this is an excellent way to conserve cash flow, get a little bit of perk from your rewards, and stretch out cash as much as possible. So I do want to talk. That is a big thing. But
Yes.
just remember, one thing I want any new business owner to think: if you don't ask, you can't get. So that's what negotiation 101 is. Always ask. Don't be afraid to ask. The worst I can say is no.
Yep. Closed mouth doesn't get fed. I always say that.
Yeah, I love that one. That's a great one. So now back over to the lease or buy. There isn't a perfect answer on this. I will tell you, I see a lot of times in my clientele, leasing is the easiest way to go. So there's low cash outlay usually, very small upfront costs that they're doing for the vehicle, the van, and then they're just making monthly payments, and they've worked out the lease where it makes sense. It's just a monthly outlay of cash flow, and that's it. Now, keep in mind, when there are pros and cons from a tax standpoint. So if you lease it, you just deduct the lease payment every month, and that's what you get. If you buy it, now you have debt. It's kind of similar to the lease payment, but depending on how you're financing it, it's now your vehicle. Something, you can't just you have to sell it to in the future if you want a new one. You can't just trade it in, or you could, but it's a little bit different than a lease. It's not quite as
Yeah.
easy. But if you buy it, you do get a more advanced deduction for it. It's called a Section 179, and you can deduct a lot more of it. And the answer to that really depends on the business. So I really can't give a blanket answer to it. I would say a lot of times, because of the ease, I see a lot of, like, I have a solar client, $22 million a year. Everything's lease, and they just love the lease model. They can turn over the van. For them, it's very plug and play in their mind. That's why they like to do it. I could make an argument from the tax deduction area. The only thing I do want to say about the tax deduction side of it, it's great to get a hefty tax deduction, but what scares me is a lot of times CPAs will say, hey, go out and buy equipment so you can get a big tax deduction. So everybody does that. They think they're great. They're buying a bunch of big equipment at the end of the year. Now they're financing it, and they'll do that for 2 or 3 years. And now they have, in some cases, multiple $1 million of debt, or at least $1 million of debt. They're having to use their current year profits to pay that debt down. and they've already utilized the tax benefit from those vehicles. So it's really a slippery slope. I had a client come to me a couple years back, and their cash was just like going down, 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 down. And I was trying to figure out what was going on. And it was they were buying equipment every year, hundreds of thousands of dollars equipment, because their CPA was saying, "Hey, you don't want to pay any taxes," and they were financing it. And now they were using all of their current year's profits to fund the debt on those vehicles and equipment and purchase. So I just say it's kind of a little bit of a math problem, and a tax deduction sounds good, but it's not always appropriate for the business, because it can kind of create a cash crunch if you're not thinking longer term and at the bigger picture. So hope that wasn't too technical. There's not an easy answer to it. Definitely leasing makes it a lot easier. And on the tax side, owning gives you a little bit better of a front end deduction.
Yeah, no, that makes sense. And I've heard the leasing side, normally you're constantly in newer vans.
Right.
You know what I mean? You don't have like those clunkers riding around, and
Right.
normally maintenance is rolled in and stuff like that. So there is a lot of other perks that are wrapped into it. So I have done both, especially going through COVID. We had to, because you couldn't buy any. I mean, trying to find vans was hard. And it was expensive. I think we paid a little bit more, but that was just kind of market value at that time, versus what it is today. But they were awesome vans. I mean, they were top notch. Maintenance, they'd come pick it up. I mean, we'd have put the guy in another truck, leave it at the office. They'd come pick it up, take it, bring it back. So there was some perks to it. So that's why I said I've seen both sides of it. And I've also heard of people doing that where they depreciate too much too fast, and now they're kind of caught with their pants down, like, oh shit, what do I do now? This is another thing I've always asked is, when people do like the pre-tax payments, like the prepayments, like what is your opinion on that? I mean, I know it's probably situational again, but just your thought on that process for businesses.
Gil, let me make sure I'm understanding you. Do you mean estimated tax payments as part of paying in your tax, or what do you mean tax payments?
Well, I've heard, so I don't know totally, but I've heard where people will pay like they'll prepay, like they'll pay like stuff, like
Oh,
payments.
like expenses, you mean?
Yeah, like
Or
they'll yeah, it's something like that. I'm probably saying
okay,
it
yeah.
100% wrong.
No, no, it's okay. So I'm going to cover two topics because it may be one or the other or both what you're referring to. So when you start to become a successful business that's spinning off profit, you do want to make estimated tax payments. So those are kind of like, think of it, paying your taxes in advance, and you're doing that so you get around penalty, well, interest charges that the IRS in particular will charge you. So you do want to do that once you're subject to doing that. The other reason you want to do that, which I'm a big fan of, we're back to cash flow. If you don't make your estimated tax payments, now you're going to owe a bunch of money at April 15th, which just passed us. So you're going to have to write a big check for April 15th. And then theoretically, you're also supposed to be paying on April 15th, 2025's first estimate of taxes. So if you haven't done that, you're like in this really cash crunch. And what I find is when people get in the cash crunch and they can't pay 1 year's worth of taxes, what do you think they do? They don't file their tax returns. And then next year, thinking they're going to catch up. And then next year, they still don't have the money, so they don't file their tax return. And then before you know it, they've got like 5 years of unfiled tax returns and they owe a bunch of tax. So I'm a big fan, and I'll preach this to death. Try to make your estimated payments, because that'll keep you out of hot water, and it helps you manage your personal cash. So that aside, that's that issue. Then the other thing I think you may have been asking me is, yes, if you can, there's two accounting methods, and I don't want to get too technical, but one is a cash basis, which means when you pay for something or when your client pays you, your customer pays you, that's what you're either taking tax on, or you're paying tax on, the money you received or the payments that you made out. The other one is accrual, and that's better for not taxes generally, but better for kind of reviewing how your business is doing from a true financial standpoint. We won't get too much into that. Let's just talk about the cash one, because that applies to most taxpayers. And yes, Gil, like if at the end of the year you pay, if now the truth is, if you put it on your credit card, Gil, at the end of the year, your suppliers, there's a little loophole. You get to deduct that. even if you haven't paid your credit card. So the best thing to do is any suppliers that you can charge things and get it charged by the end of the year, you want to do that because it's lowering your tax. It's actually reducing how much tax you'll owe. Now, if your vendor won't take a credit card, yes, paying it, literally, if you have the cash flow and it's not going to hurt your business, writing a check for $50,000 to pay off something in advance or anything that's a deduction that you're entitled to makes total sense because lowering your tax now rather than future years is makes your dollar more powerful. So yeah, if you have the money and you can handle it, now don't do it and it's going to create a cash crunch because that just doesn't make sense. But if you can
Yeah.
handle it from a cash flow standpoint, do it all day long.
Yeah, no, no, that makes perfect sense. And we're pretty much at an hour, but now I have a one last
Oh,
question because
wow.
exactly, it goes by fast. To make me understand how when businesses first start out, like you're allowed to show a loss for the first like couple of years. Can you like without going crazy, like explain that process? Because I did. I think some people misunderstand what that means.
Yeah. I would say so they're called the hobby loss rules. And what I would say, don't even get hung up on how many years of loss you can have because it's not true necessarily. People kind of misunderstand it. You could technically have, I don't know if anybody remembers this, but Amazon, I think, had 10 years of losses. There never was a year, there was never, for 10 years, they lost money. There was never a doubt Amazon was a real business, right? But they were losing money every year. And so really what the spirit of that law is, are you a real business? Like, are you really trying to make money? Right. So the from a realistic standpoint, you couldn't really run an HVAC company and lose money for 10 years and probably still be in business. So just from a number standpoint, that probably wouldn't work. But the number of years don't matter. It's really the intent. Are you doing all the things to be really in business? Do you have a business license? Do you have multiple customers? Are you really trying to make a profit? And if you can establish that, honestly, it doesn't matter whether you have a loss for 1 year or you have a loss for five. They're all legitimate losses and you can deduct them. Now, keep in mind, when we say deduct them, that loss, you have to have some income other than your business to get any benefit out of that, right? So, like if you're married and your wife has a W 2 job and she's making $50,000 a year, and in your first year of your HVAC business, you lose, let's say $50,000, theoretically, between the two of you, you would owe no tax that year because your loss would offset her W 2 wages, if that makes sense, and
Yeah.
you'd get a big old refund for whatever she had withheld.
Nice. No, that makes perfect sense. Yeah, because I know that I had to have it explained to me because, when I first started the podcast, and I'm like, and I did it in the beginning, and it's been a legitimate business for I would say like the last 4.5 years. In the beginning, before I was maybe a little bit more, but when I wasn't really making money, and then when I started making money, I'm like, oh, this isn't just like a hobby. I can just add a little bit onto my taxes, that I'm making money. It's got to be a legit business. People kept saying that, like, oh, the first couple of years you can show a loss and do this. And I'm like, what the fuck does that mean? Like I don't, I didn't know what that meant until it was explained, but I have went and like bought cameras because I see this business, like I have a lot more that comes in than goes out. So I do different things for the most part, but it's been pretty good. I haven't, my
Yeah.
tax person has had it where I've this year was good. I'm getting a bunch of new stuff and I forget exactly what it was, but I didn't have to pay much at all.
Yeah, but that's a great example, actually. I didn't realize you were meaning the podcast. Anytime it's like podcast or photography where we can buy a lot of toys, that is the one where the IRS really scrutinizes it because they do feel it's probably just a hobby and you're goofing around. So it does so when you do have a profit, it does legitimize your business. Like in the IRS's eyes, it's like, okay, now it's a legitimate business, you're having profit. So you definitely are, if you're doing one of these businesses where it's kind of hard to tell it's a real business as opposed to a hobby, those are the ones where you probably wouldn't qualify if you got audited, if you had 5 years of losses, you wouldn't qualify because it'd probably be a hard time to prove you have a legitimate profit motivation if it's that many years of losses.
Yeah, plus they might think I'm like slave labor because I have it worked out where like all of my kids are technically employees and
Yeah.
all kinds of stuff, but it all works out. And our vacations are business retreats. We talk about work and whatever. It's all working out. But yeah, man, we're getting past this time. Tyler, thank you so much, man. This has been awesome, and I cannot wait to come on your show.
Thanks.
To be able to talk with this. Like I think we did a lot of really good information. Like I said, maybe a lot of the people in the chat, they're technicians. They're not trying to, there's some of my best friends in the world. They're not trying to start a business, but I get a lot of emails. I mean, I literally probably get 100 plus a month about people wanting to start a business and they ask these questions. And some of the questions, like I'll give them my best answer, but I'm not qualified to answer that. So
Right.
the fact that we were able to cover some of those is awesome. So I really, really, really appreciate that. And I put your website, but it's for your podcast, in the show notes of this. So I don't know if there's another way if somebody did want to get in touch with you. Is that the best way or another way I can add it?
Yeah, so profitingrit.com is my podcast. I'd love people to check it out. Give me feedback. I'd love any feedback. We're just starting that out, so would value your input. And then my business site is FixCFO, FIXCFO.com. If anybody wanted to go there, if they want to talk with me about something, run something by me, an intro meeting, it's no problem. As a courtesy to your audience, I'd be more than happy to talk with them. My typical clientele is larger, so I'm not going to try to sell anybody anything, just try to help people. I'd be happy to do that.
No, that's awesome, man. Yeah, I really appreciate that. I will matter of fact, I'm gonna write that down so I can add it to the show note. You said so fixed
FIX, like you're fixing something, FIXCFO.com.
com. All right, I'll make sure I add that to the show notes. Why did Spotlight come up? Get out of there. Already. Sorry. All right, man. If you want to hang tight, I'm gonna go ahead and close the show out. But once again, thank you so much. And I'll make sure I send everybody over to check you out on the podcast too for more information.
Thanks, man, and thanks to the audience. I know technicians, hopefully I didn't put them too much sleep, but I really appreciate you guys sticking with us and being here.
They'll live, man. They'll live. You did great information, dude. Thank you,
Thanks,
brother.
dude.
All right, guys. Thank you so much for listening, man. Like I said, this Tyler is an amazing guy, man. And the fact that he normally works with a lot bigger companies and he's willing to come on here and talk about some of the things for people starting a business is huge because that's not, like he said, that's not normally his clientele. And the fact that he's willing to, um, give you information and not try to sell you something and just try to help you is pretty awesome. I literally do get hundreds of emails a month of people saying, "Hey, Gil, I'm wanting to start my own company." And you guys know I always want to help, but that's not really my qualifications. I'll tell them what I know about business and I know a good amount, but some of these things I don't know. So somebody who's an expert, it's what they do. They're a CFO. They understand the tax laws and things like that. I thought this was awesome, and some of the answers you gave were really really good. So please, if you have any questions, further questions, check the link. Um, Reach out to Tyler and he can take care of it because that's his expertise. And if you are into the service business and you want some cool, podcast that you hear some business owners and their experiences, check out the link down below. I have the link that's going to go to Tyler's website for his show. Profit and Grit. I'm sorry, I kept saying grow, but it's Profit and Grit with Tyler. And his link is down there. It goes to his website, and you can find it and get to the podcast and all that. Go check it out. If you're something you're interested in, give him some feedback and tell him that Gil from HVAC Uncensored sent you. All right. Thank you guys, man. I didn't do the shout out in the beginning, so I'll try to do it now. Obviously, my moderators, Rookie, my brother, my main man, Zeke, my other brother, Mr. Jason Johnson, my other brother. I love these guys. Thank you so much for being my brothers and being my moderators in here. So I appreciate you. The chat's going up. I can't see everybody, but East Coast, Rudy just works, been in here. Kitchen Cowboy, thank you. I think it's one of the first time I've seen you in here, so thank you so much. East Coast, what is up? What is up? Mr. Freon Leon, my brother, Mr. Nasty, what is up? I know Adrian was in here. My main man, Everett. What is up, my brother? Will Speed was in here. Trying to catch everybody to see if I missed you. Mr. Jared, thank you for being here, man. Really appreciate it. Thank you. Let's see. Oh, almost forgot Colin with Kraus, my other brother. What's up, my man? Thank you for being here. Trying to make sure I don't miss anybody. If I do miss you, I'm sorry. It's why I normally do this in the beginning of the show. Pork Chop Outdoors. It's the first time I remember seeing you in here. So welcome. Thank you so much for being here. I really, really appreciate you being here. And I think that's it. So if I missed you, my apologies, but thank you so much for being here. I appreciate your time, man. I get it. You guys can spend your time doing anything after a long day's work, and you find time to hang out in my chat and watch this show. So I'm forever grateful. Thank you for that. So make sure that you follow the podcast on all the social media sites to stay up to date with what I have going on. Um, Hope everybody had a great day, doing a great week so far. Obviously, Easter's coming up, so happy Easter to everybody. If I don't talk to you, can't wait for this weekend. Going to be a good time to spend with the family, so looking forward to that. But let's start to close this out, man. We're getting about that time. Guys, keep your head on a swivel. All right. I want each and every one of you to be safe out there. All right. I don't care if it's driving, the breaker, the ladder, whatever it is. Please, please be safe. I want each and every one of you to make it home the same way that you left. Do the little things. Set yourself apart from the next guy or girl. All right. Just staying the same. I always tell you, you're either growing or you're moving backwards. There's no such thing as just staying the same. And not even just with work. Just always try to better yourself, be the best version of you. All right. Listen to a podcast, read a book, watch a video, whatever it is. Just keep trying to get better and give back to the community, give back to the trade that you love. All right. Help somebody else. I don't care what stage you are in, you can help somebody in some way. And the other thing is just give a shit about other people. All right. Pay attention, ask questions. You see somebody's having a bad day. Hey, man, everything all right? You never know. One of those conversations can be life changing to somebody. People say it's corny. You know me. I don't give a damn. If you spread out positivity, you get positivity back. Nobody will ever change my mind on that. I've lived it. Okay. Um, those negative times when it was negative, I lived negative, my mindset, depression, anxiety, all that kind of stuff. And when I say positive, I think about that kind of stuff. I have more positive outcomes. I feel better. It's just a better way to live, man. It's a better way to live. Okay. That being said, man, I love each and every one of you. Thank you so much. I appreciate all of you. Next week, as of right now, is going to be the first solo show in a while, just me. So look forward to it. We'll be hanging out. Please let me know. I do want to know. I know most of you said it was fine about Fridays. I think I might do that. I'm going to start to do the show at 8 and then do a hangout right afterwards so we can hang out for Friday nights. Because a lot of times when I'm doing these shows, you guys know I can't always interact with the chat because I'm talking to the guest. That way, right afterwards, I got the audio for the podcast. Then we go right into, the hangout where you guys can hop in, whatever you want to do, and just sit and bullshit and have a good time. All right. Have a great rest of your week. Happy Easter. I'll see you all later.
Thanks for listening to the HVAC Uncensored Podcast. Don't forget to check us out on Facebook and Instagram, or email us anytime at hvacuncensored@gmail.com. Now, get back to work. Shut this down. The views and opinions shared on the HVAC Uncensored Podcast may not necessarily be the views and opinions of our sponsors or guests.